Okay, direct and indirect costs. I know we've got some TPOs in the audience. This is the portion of the presentation least applicable to you for the moment. Unlike other avenues of grants management, here is an area where OMB is not very prescriptive. Their basic philosophy is the range of circumstances at the local level are so diverse and too broad, we cannot categorically say dry cleaning is always a direct expense, never an indirect. Or that the salary of the agency receptionist is always indirect, never direct. You get to be the judge. You make the determination, you render the verdict at the local level. Then once you make that decision, because of one of our other 7 commandments, costs must be accorded consistent treatment, you stick with that decision in all of your grant administration activities. Then they also want you to be very careful in your accounting and classification of costs to ensure that something, for more larger, complex organizations, you don't inadvertently bill as a direct expense something that has been included in your indirect cost allocation plan. That's something that has to be watched for throughout the period, which then goes back to basic overall internal control over your organization. Typically, the indirect cost rate proposals drawn up by the CFO of the organization might be approved by the board of directors, county commissioners, city council. It wouldn't be line personnel within the finance department or certainly not the transit department who would likely be involved with such. But you need to be aware of what's in the indirect cost allocation plan. Because if somebody's time is built in there as an indirect expense, you in transit can't turn around, build GDOT for indirect costs at 13.7%, and then try to directly bill the same item again. That would be a violation of OMB rules, and you'd be seeking overpayment. So you've got to be careful that all costs are accorded consistent treatment throughout the enterprise-wide financial affairs of the organization. I mentioned that in the old days, OMB looked at tribal governments, city governments, county governments, and state governments as one audience. They looked at nonprofits as another audience, and they look at universities and hospitals as a third audience. Now that we've combined everything under one document, they had to come up with a new name for you all. So instead of referring to nonprofits or IHEs, institutions of higher education, or public entities, you all have a new nickname. Anybody know what it is? Because you'll see it in all the grant terminology nowadays. You're an NFE, non-federal entity. Somebody's a good bureaucrat here, guessed it. Non-federal entity. So you're all NFEs. So if you see any use of that acronym, they're referring to anybody but the federal grantor agency. And this slide brings up another term. We're going to talk about direct and indirect cost. OMB wants you to forget about indirect costs. They don't call them indirect costs anymore. And forgive me, it's going to sound like I'm cursing at you. I'm not yet. But indirect costs are now F&A. F&A. And that stands for Facilities and Administration. If you are a larger NFE, and no one in this room meets that qualification, OMB requires you to bill indirect costs in those 2 indirect cost pools. Smaller entities can have, and public agencies can have as many indirect cost pools as they want, but because of complexity, they're limiting larger organizations to just these two. For most accounting purposes, unless your nonprofit is more than 20 million a year in annual budget, I believe F&A as the two indirect cost pools work adequately for most nonprofits. So in other words, you go down and tell me what you consider to be indirect costs, and then you divide that column into two separate sub-columns. One related to facilities, and that would include building maintenance. It would include building insurance. It would include utilities. Administration would be that salary of the executive director, the salaries and fringe of the agency receptionist, etc. So if you hear the term F&A, that's really somebody talking about indirect cost. I just think somebody at OMB has a wicked sense of humor, and no one on the committee got it at the time. Direct costs are exactly what the name implies. They are costs that are 100% attributable to transit or to the program activity. Driver's salaries, fuel for the transit buses are examples of direct costs. Here are some of the generic examples OMB provides. Compensation of employees whose time is 100% devoted specifically to that activity, transit. The cost of materials acquired, consumed, or expended specifically for public transit purposes would be a direct expense. Capital equipment would be a direct expense. Using a uniform system of accounts, here are some categories. 5011, a couple others up there. Typically, these would be direct expenses in anyone's classification of accounts. That said, for the Georgia Dot people, if he says tomato and you say tomato, you both could be right. What could be an indirect cost at your agency could be a direct cost at his agency. Neither one of you would be wrong. It goes back to this OMB, you get to make the call type decision. And that's okay, as long as you're consistent and you're consistent, you're okay with respect to OMB guidance. Normally, these are all in any transit agency or agency that operates transit would be considered direct expenses. Again, I'm harping on my soapbox about documentation requirements here. Again, if somebody's time is shared, they could be direct, but billing to two different programs, in which case you've got to have the backup. Budget estimates shouldn't be used. There are some situations, particularly in smaller nonprofits, where virtually 99% of your budgeted items fall into a direct bucket of one program or the other. And the costs of developing an indirect cost rate proposal or an indirect cost allocation plan really would not be beneficial given the overall status of the agency. You're just so dependent on federal grant funds to support the operations. There's really not much going on in the non-federally funded activities, and as a consequence, virtually every cost drops right into a direct program bucket, or quite frankly, the agency doesn't undertake the expense because they don't have the money otherwise to fund it out of non-federal funds. In that type of situation, there are small items such as building utilities that may not be a direct expense. In those circumstances, it is permissible to use an allocation basis to essentially convert that indirect expense to a direct expense. So given this small nonprofit that maybe operates just 3 programs, one of which is transit, and they operate out of a 1,000 square foot facility, and literally their only truly indirect expense is building utilities, typically you would allocate facility-based expenses that are indirect on the square footage consumption by each program. So if transit took up 5,000 square, or 500 square feet of the 1,000 square foot building, transit, we'd convert that indirect expense, whatever the total utility bill is, we'd multiply it by 0.5, and we would report it as a direct expense in our monthly invoicing to GDOT. Now, in our grant application, we would tell GDOT this is an allocated, this is going to be what's known as a directly allocated expense. And you would say we do it on the basis of square footage. Now, how did I determine that square footage was an equitable basis for distribution of that cost? I didn't. I followed some guidance that's quoted in the super circular as a reference guide. And I'll show you that in a few minutes where you can get your hands on that. It's got a page in there where it lists about 30 items that are candidates for direct allocation methodology, and it will give you a suggested basis to do the direct allocation. And your obligation is to form the grantor agency in the application that we bill all our direct expenses, we have minimal indirect expenses, and we directly allocate them using, and you create a little table, here's the directly allocated expense, here's the basis. And as long as you do that in your grant application, usually in pretty good standing. Let's shift gears a little bit now. We've talked about direct expenses. Indirect expenses, or F&A. We cannot directly conclude that 100% of the expense that our agency has incurred directly benefits a single program or activity of our organization. The executive director manages 12 programs, and the result of that oversight benefits all 12 of those programs. Anytime we have a cost that benefits more than one, in accounting parlance, one cost objective, and cannot readily be identified without disproportionate efforts, we would typically then consider that to be an indirect expense. Examples, and again, there's a slide on the F&A. And I'm adding this other notion to the equation here. Someone asked a little earlier to talk about cognizant agencies. Historically, there's been this concept of cognizant agency. That is the agency at the federal level that received, reviewed, negotiated with you, and ultimately, hopefully, approved your indirect cost rate proposals. The concept of a cognizant agency has been around in grant circles for a long, long time. Almost always limited to indirect cost approvals, to a lesser extent resolving audit issues that might arise where you and the audit firm have a disagreement. The cognizant agency can step in and wield powers to resolve audit situations and get you off the hook. Because of those two disparate functions in the super circular, the concept of cognizant federal agency has been split into two: a cognizant agency for indirect costs and a cognizant agency for audit. So far, I've not seen any scenario where an entity has two different cognizant agencies, but OMB says it can happen. I haven't seen it yet in my experience, but it can happen according to the feds. So it may not be the same organization. Typically, if you get over $50 million a year in federal financial assistance, OMB will tell you who your cognizant agency is. For most of us in rural transit, we don't see anywhere near $50 million a year in federal financial assistance. We are supposed to self-select our cognizant agency by looking at the pattern of federal grants received over a 5-year period. And the agency that provides us the most financial assistance during that period, we reach out to them and say, we've done the analysis at the city of Smithville, and we have determined that HUD has provided the city with the most amount of money over the 5-year period, 2014 to 2019, pursuant to OMB Circular, or 2 CFR Part 200, and we therefore have identified you as our cognizant federal agency. Please find attached our indirect cost rate proposal. And they're supposed to then process that for you. And then that gives you your federal agency. In some cases, you may not hear back. The feds won't be responsive, imagine that. But it can happen, in which case you keep your indirect cost rate proposals on file. And when GDOT says, why are you charging me 13.7% indirect? You say, the city of Smithville has prepared an indirect cost allocation plan. We have submitted it to who we believe is our cognizant agency for indirect cost, but they haven't gotten back to us. Therefore, we have kept it on file and will make it available to you upon request. In which case, Georgia DOT should say, yeah, we'd like to see the plan, and they may step in and evaluate the legitimacy of your 13.7% calculation. So that's how cognizance works. We have this sort of backdoor strategy, what to do in case the feds aren't responsive. That's a terrible public policy. And quite frankly, given the attention we're paying to the super circular, I think more and more federal agencies are stepping up to the plate so you don't have to use the backdoor policy by keeping the plan on file. You should get a letter back from who you've identified as cognizant agency, and hopefully they'll step up to the plate and do the right thing. But it may not happen, in which case you just keep it on file and you make it available to request any of your grantor agencies. Again, public agencies, they can have as many indirect cost pools, facilities, administration, computers, IT. I've seen nonprofits. There's an agency right on the border here, Aiken County Council on Aging in South Carolina. I visited them about 20 years ago. Had 58 indirect cost pools. I mean, talk about making a simple, trip to the drugstore complicated. They built the trip with 58 intervening stops. Consistent treatment of indirect costs. OMB is not going to tell you what's direct or indirect. A federal grantor agency, GDOT, shouldn't be dictating to you. Generally, some of the things that are typically, again, with a caveat, no one's telling you this is the way it should be done. Central service costs. I work for a city government. A central service cost would be my payroll department, my human resource department, my legal department. Those departments that exist to serve the operating departments of police, fire, transit, environmental services, the library, etc. We couldn't exist without their help. Those are central services. The general administration of the organization, if I have a city manager, that would be administrative indirect cost. Generally, accounting and personnel services could be either indirect or central service costs, the cost of operating shared facilities. Indirect costs are subject to the same allowability standards as direct costs. And we have to keep up. I've mentioned some unallowable costs. We have to keep up with those costs in our accounting system, because when we do indirect cost allocation, if we choose to do so, our unallowable costs take a hit of those indirect costs as well. Got a question?
I just going to be clear in my own head. Indirect allowable administrative costs includes labor, right?
Yes.
Okay. Just want to make sure. Thank you.
The only way you can recover, the only way you can get paid for indirect costs is that you bill them in accordance with an approved indirect cost allocation plan. So you got to do the plan first. You got to get the plan reviewed and approved by a cognizant agency. Then you can bill it. And if approved by a federal agency, every other grantor agency to your organization is supposed to accept, acknowledge, and follow that indirect cost rate plan. Pay the 13.7%. If we're New York City, it may be necessary for transit to have its own indirect cost plan separate from police, fire. For most smaller organizations, that's not the case. And my rule of thumb, does my organization need an indirect cost allocation plan? If any costs associated with transit service delivery is incurred by a sister department or unit of my organization, then it's likely that I need an indirect cost plan to tell me what my agency's pro rata share of those costs are. So if I depend on human resources to manage my drug and alcohol program, for example, they do all the interviewing and screening of my employees. When they get the selected candidate, they send them for the pre-employment drug test. They get all the results. They deal with the third-party administrator to select and let me know when a random test pops up for one of my employees. They do all that. That's an indirect cost. It's part of doing business as transit. It's a regulatory requirement. It's a part of doing business. FTA wants me to report that cost. I would need to prepare an indirect cost allocation plan because human resources benefits the police department. They benefit the fire department. Some of those guys hold a CDL. They're subject to testing as well. What's my share versus the fire department share? I don't know that without an indirect cost allocation plan. So some portion of the city's budget allocated to human resources is going to be assigned to me. Some of it's going to be assigned to the fire department. Some of it's going to be assigned to the police department. Whoever benefits from HR resources production will bear a pro rata share of their expenses. That's what an indirect cost does. An indirect cost plan does tell me how much is on my budget plate. Now, whether I can bill GDOT for it depends if I have an approved plan, whether there's enough 5311 monies to go around to pay for it. So again, to answer the question, if some of my expenses delivering a unit of transit service are produced by people outside the transit department, then I need an indirect cost allocation plan. Will all agencies incur indirect costs? Sometimes no. If I have a freestanding or independent transit authority, they typically will either hire as a direct transit employee an HR director, a payroll director, and perform that function in-house, or they'll make a determination it's not cost effective to have that level of staffing in-house, and I'll pay a third-party contractor like EDS to process my payroll. And I'll pay for that as a direct service expense out of my regular budget. So it's possible that some transit organizations do not require an indirect cost allocation plans. Most do.